we still a seriously underbanked country? I mean, for all the Jan Dhan accounts that we have, it is still only an account, and even that I think is what, 80% or 85%, and over there it's not as if everyone has credit. So, Mr. Sethi, to start with you on that, do you think banks have the wherewithal, or if you want to expand it to the financial system, banks plus MFIs plus NBFCs plus fintechs, are you geared as we go towards a 5 trillion and a 10 trillion economy to service the last man in terms of loans?
Yeah, I think it cannot be done only by the mainstream banks. That is established, because one is, of course, the cost structure, and number two is that the last mile connectivity is still an issue. Despite having the largest branch network, we still feel that we are not able to really reach the... So it's a combination of the mainstream banks with capital providers, and then you have NBFCs, MFIs. I think the whole ecosystem has to work. And the concept of funding a thin file customer, you know, the usual word which they use, as we are borrowing from the NBFCs and MFIs, honestly, you know. And how do you finance a thin file customer is data driven essentially. So we have the data, and if I'm not able to deliver to them, I can always use the co-lending models, which is again another concept, you know, which is quite useful. We have to get it right. The technology would enable us. So in terms of reaching the last mile, a combination of mainstream banks, NBFCs, MFIs, backed by the data and the capital provided by the mainstream banks is quite useful, I suppose.
Shyam, you know, we're going great guns as far as retail growth is concerned. Banks are moving from probably 35–40% public sector banks, retail, to now well over 50, some of them even 60–65, and private sector banks are already at 65% retail credit. What if the cycle turns? Are we, you know, unsecured credit, I think already the Reserve Bank has raised that red flag. One economic downturn can lead to a lot of issues in terms of collecting. As Mr. Kumar says, collecting is always more difficult than giving. Do you think we are prepared for that? Are we heading into a likely problem on retail credit?
Now, in another conversation with you a few days ago, I explained the situation. Let me repeat myself. I think, see, will there be some cycles? Absolutely, yes. All right. Is that cycle upon us right now? I don't believe so. Second, even if the cycle were to arise, we must understand the level of bad cannot be what it was in the past, only because of the reasons we spoke a while ago in terms of the architecture of the ecosystem of banking today is materially different than it ever was. You know, we all leave digital footprints all around us, and it's something that you and I cannot escape. So that data, banks, financial institutions, NBFCs, whoever they are very thoughtfully mining it to make the best sense of it. So unless, and I keep repeating always, unless the intention is to defraud the system, a bona fide borrower today is most keen to honor his commitment and pay. So if you take the last 25 years of Indian banking and look at it, which you've done all the while, the amplitude of credit back has started coming down from 20% NPA to 10 to 3.9, likely to go to 3.5. The worst case now it can go to 5%, 5.5%. It's not going to go back to 10%. Because we'll all be asleep at the wheel to let that happen. So I think we can be quite sure that the Indian banking system is in a place where the level of bad will not be what it ever was. That's one is given for the reasons I mentioned in terms of the ecosystem, the development of technology, the smarts that people have developed to ensure that you are well insulated. Second, I think our belief that unsecured is equal to necessarily bad is actually beginning to get challenged, because the unsecured borrower, particularly the younger, newer borrowers, don't want an impaired credit history. If you see in the recent past, the unsecured behavior popping up to some extent, it's not the existing customers of banks that are causing this problem. It could be the exuberant lending at the bottom end whom we are trying to bring it into the system, and there's a good chance that they are repairing their credit history once the collection process is upon them. So I don't think you will see bad rates as high as it was. Yes, will there be some sort of uptick given the if there's a slowdown in the environment, you may see that, but I am reasonably convinced that the level of that will be way lower for the reasons that we've all been talking about. But I'll just go back to one point, when you asked the earlier question on credit to the bottom end of the pyramid. I have to say, Lata, the digital lending, and you probably are aware that we're doing Kisan credit cards using digital technology, along with RBI hedge. It's a farmer loan, right? 1.6 lakhs. It's in 5 seconds. 5 minutes. That's all it takes. And that at scale is going to change quite materially. It can be 20, 30,000 crores credit opportunity for farmers and dairy farmers and, paddy farmers, a range of them. A bank of our size, we are seeing scale. And I can't quite imagine what it will be like when SBI or somebody were unleashed. So for sure, that's going to be a great bottom of the pyramid, a credit expansion opportunity. I'm seeing that already happen. And coming back to your point on retail bad, I would think it will be way lower than it ever was. Will there be an uptick? Yes. But I think the smart system, the ecosystem ability to catch early, detect early is improved materially. I don't think it will deteriorate to the extent that we saw, say, even 3, 4, 5 years ago.
What would be your ask?
I think 3 things. First, I think both government and Reserve Bank, if they continue to support the way they have done for the last 4, 5 years, I think that is very, very important.
Okay.
The second would be in terms of, I think, the real improvement in our recovery processes. Because the recovery process is
not good enough.
Not good enough, whether we talk about the IBC or the legal process. I think there is a huge requirement to streamline this part. And the third is definitely in terms of the priority sector. I'm not saying like we reduce the overall, but I think we are creating so many subcategories within the overall priority sector where banks would be finding it very, very difficult. And ultimately, who is impacted? If the banks are not able to make money, it's ultimately the common person or the depositor who are impacted. So maybe because this is the requirement of the country, we can keep an overall part, but not in the subcategories on the priority sector.
Shyam, your ask, and I'm wondering why I didn't get that from the other 2 bankers. Maybe my thinking is wrong. See, when the Adanis bought the cement companies, none of the banks could finance it because takeover financing is not allowed. They had to take foreign money. A ripe fruit was not available for the Indian banks. You think those rules need to change? You should be allowed to finance takeovers?
No, before I answer that, Lata, I think the question you asked some of them, I hope I'm not misinterpreted, but I believe the collaboration between fintechs and banks is probably less understood. And sometimes innovation happens at the fringes of regulation, right? That's how it works. Where you control, where you let go is always the challenge. And I say that because we work very closely with fintechs, and there is always that nervousness: are we stepping over and going to get into trouble? But I think a better appreciation of that will help to inclusion, spread the credit expansion, get customers from unbanked categories into banking system. I think there's a huge opportunity. So if you ask me for an ask of the regulator, I would encourage more dialogues around how do you make sure that what looks like an adventure is actually allowed, but within a boxed environment, and then you can scale it up. So that
They allow sandboxes.
Yes, they do. Yes, they do. But I think what happens in all these things is that there are some silos that do, but whether it breaks or whether it overrules some existing regulations needs some more thinking around it. Now, when I say these things, it can be misinterpreted, but I think the message is very clear. We have to do more in that space to ensure that it can truly be expansionary.